There's going to be a lot of losses. Investors are going to lose a lot of money. Average Americans, people are going to lose jobs. The free market has to do this to fix what the government screwed up. But it's not the free market that you want to blame. Blame the government. Blame the central banks. They created a problem. The only way to solve it is with the free market. It's the government constantly preventing the free market from solving the problem. That's why the problem is now so big.
In today's video, Peter Schiff, founder, CEO and global strategist of Euro-Pacific Capital, and a prominent Bitcoin critic, warns Michael Saylor and all investors to be careful about Bitcoin. He believes that Bitcoin price will go down even lower. Peter gives a warning that the 2008 crisis was just the prelude to a larger sovereign debt crisis in the United States that may lead to a collapse of the US dollar. Before listening to him, please ensure to smash the like button and subscribe to the channel. Let's dive into his last interview now.
We start to see a complete meltdown of society as a result of shortages and price controls or power outages, that whatever's going to happen, and people rioting in the streets. I don't know, maybe they'll do the right thing then. I don't know, but they tend to delay doing the right thing for as long as they possibly can, and so it could get pretty bad between now and that inflection point. But I think if you just look at what's already happening, a lot of the signs are there. On one of my recent podcasts, I talked about how the fact that everybody says they don't ring a bell. They never ring a bell at a major top or a bottom. And, my experience is they ring a lot of bells. People just don't know what to listen for. They don't hear them. And I said, what happened in England? That was like, Great Ben. A massive bell went off there because the Bank of England broke. And, maybe they're the first domino to go, but, all the central banks are in the same predicament. And, interest rates go up, and it's not just a shallow recession, it's a depression. And the problem isn't raising interest rates. That's not the problem. That exposes the problem. The problem was lowering interest rates in the first place and leaving them there so long and allowing all this debt to build up, allowing all the malinvestments and the misallocation of resources, because now we have this gigantic mess that needs to be cleaned up, and it's not going to be cleaned up pretty. There's going to be a lot of losses. Investors are going to lose a lot of money. Average Americans, people are going to lose jobs. The free market has to do this to fix what the government screwed up. But it's not the free market that you want to blame. Blame the government. Blame the central banks. They created a problem. The only way to solve it is with the free market. It's the government constantly preventing the free market from solving the problem. That's why the problem is now so big. It's like, forest fires. You have fires, and if you have enough fires, then you don't have a really big one. But if you don't have any of those small fires, then eventually you get a much bigger one. Or, same thing with earthquakes. I mean, you have a bunch of little earthquakes, and then you don't have the big earthquake. You release some of the stress from the fault or whatever. But, the Federal Reserve never allows any of these recessions to run their course. They never allow the market to really purge the economy of the excesses, get rid of the companies that need to fail so we can make room for those that need to succeed. Instead, the government just bails everybody out, props up companies that should fail, replaces one bubble with a bigger bubble, and the economy never really heals. And so now, we're going to have, 10 on the Richter scale kind of economic earthquake as a result of these imbalances that have built up because government has stopped it. And what's amazing is that so many so-called experts, in academia, on Wall Street and government, they still don't get it. The reason that I knew the 2008 financial crisis was coming is because I understood the mistakes that were made that led to the bubble that made that crisis inevitable. Well, all the people that were laughing at me in 2006, 2007, that had no idea what was about to happen, they're the same guys that are just as clueless today. They don't understand that everything the Fed has done since the 2008 financial crisis was a mistake, as they were, complimenting them. Ben Bernanke was the hero. He was on the cover of magazines. He saved us. He didn't save us. He's the reason that we're in so much trouble. Him and then Janet Yellen and the policies that they pursued instead of pursuing free market sound money policies. We inflated these giant bubbles, and now we're at the point where we can't do it anymore because now the consequences of the inflation have become a problem. So now inflation is the problem. Well, how do you stop that? Well, you got to remove all the cheap money. But then now the day of reckoning that we refused to deal with in 2008, that we refused to deal with in 2020, now we've got to deal with it. But it's way worse. It would have been much better had we followed my advice in 2008 and just let the crisis run its course. No TARPs, no bailouts. Whatever banks failed, they failed. If people lost money, they lost money. Let the foreclosures go through. It would have been much better to have sucked it up and bitten the bullet in 2008 than have to endure where we're headed now. It's way worse. The way we kicked the can down the road is we kept interest rates at zero. And so even though we had a massive amount of debt, it wasn't that expensive. In fact, even Janet Yellen last year, she said the amount of debt wasn't important. What matters is what it costs to service it. And she said with really low interest rates, we don't have to worry about the debt. Okay, well, what happens when interest rates go up? Like they're going up right now. All of a sudden, you have to worry about the debt. But remember, Ben Bernanke said a lot of things that turned out not to be true, including that subprime was contained and we didn't have to worry about it. But of course, when in 2009, when Bernanke was up on Capitol Hill, and one of the congressmen said, you're monetizing the debt, right? This is what banana republics do. Ben Bernanke says, no, we're not monetizing the debt because this QE program is temporary. We're going to sell all these bonds. And so it's not really debt monetization. Debt monetization is when a central bank buys bonds and then they stay on the balance sheet. Well, they're still on the balance sheet. We have almost a $9 trillion balance sheet. I said in real time that Bernanke was lying. I said there's no way these bonds are never going to get sold because once the government buys them, they can't sell them because who's going to buy them from the government? The only reason rates are so low is because the government bought all those bonds. The minute the government tries to sell those bonds, rates are going to soar. The reason they bought them was because we can't afford the high rates. But so how can they sell them? Because now there's even more debt. Look, that's why I called it a monetary roach motel. I said that from day one. I said, because once they check us in, it's impossible to check out. Then they kind of started going downhill. And so that's what's going to happen with quantitative easing. Not that the first one was good either. The first one was bad, but they're just going to keep getting worse. But the next one is going to be even bigger than the first four combined. And remember, when they finished QE3 and they said, okay, we'll never do it again, my prediction was that QE4 would be bigger than 1, 2, and 3 combined, and I was right. Mm-hmm. And QE5 will be bigger than the first ones. But then the dollar just implodes. It can't survive that. But unfortunately, Bitcoin's going down with it. I don't know. I feel really bad for you because I've got you're thinking right about economics. You kind of understand that, and I see some of your talks, and you've got that down. You understand, the Austrian economic angle. You know what the mistakes are.
That's right.
But you're fixated on Bitcoin. Bitcoin is another mistake. You got to understand that there's no substance there. It's not gold. It's not digital gold. Why do you think Bitcoin is still at 19,000? Despite all the money that was spent hyping it up in 2021, despite that run up to near 70,000, look where it is. Why do you think the Grayscale Bitcoin Trust that used to be at a 30% premium is at a 35% discount? Do you really think institutions are adopting Bitcoin when they're trying to unload it and that fund is trading at a 35% discount? The fund is down 80% from its peak. Is that a store of value? Is that a safe haven? No, it's not. Bitcoin is a highly speculative asset, but what the hell are you speculating on? Because there's nothing there. There's no fundamentals there. You're just speculating on a greater fool. That is not what you want to do. If you're really worried about the monetary problems and inflation, and you're looking for a store of value and a safe haven, you don't have to reinvent the wheel. You've already got one. You've got real money. You've got gold. You've got silver. You've got monetary metals that you can own, and you've got other assets that you can own to protect you from inflation. You will get no protection from inflation in Bitcoin or any of these cryptos, all you're going to do, if you buy Bitcoin right now, all you're doing is helping somebody else get rid of their Bitcoin. The winner in that transaction is the seller. The loser is the buyer. And the biggest loser is whoever buys the most and gets caught holding the bag. And there's a lot of even bond funds that have done this trade. But look, the British pension system, you have government regulations, labor laws, and they say, here's how much pension money you have to provide. And here's how much the workers are contributing, right? So you know how much you're going to get in contributions, and then you have these benefits that you have to pay. And so the pension companies have to, manage their assets to try to meet those liabilities. Well, a lot of the pension funds, not just in the UK, but everywhere, they invest in bonds, because bonds, you have an idea of what you're going to get, right? Stocks, you don't really know. Stocks, they can go down, but if you have a bond and you're getting paid a coupon, you know what the interest is going to be, and you can use that interest income to cover the pension obligations. So let's say interest rates went from 6% you were getting on your bonds down to 3%, right, on longer term bonds. So all of a sudden your income is cut in half, but you still have all the same pension obligations. Now, you can do two things. You can tell all the workers, hey, you got to contribute more money now into your pension because interest rates are down and we can't make the same return, so we need higher contributions. Or you can say, look, we got to cut your pension benefits. We can't earn as much money. But they weren't doing that because of, the law in the UK. They weren't allowed to do that. So in order to try to maintain the amount of income, they went and borrowed money and bought extra bonds. And they could do that because the short rates were dirt cheap. Let's say they can borrow at 0.25% or 0.5% and then take that money and buy bonds yielding 3%. They just created income out of thin air, and now they can keep on paying their pensions. But what happens is interest rates really start to go up, bond prices start to fall, they get margin calls, right? Now they're upside down. There's going to be a real crisis in the pension fund market, and that's why the Bank of England came in and started buying all those bonds. And in one day, the yield on a 30-year British gilt went from like 5% to 4% just in one day. And I think the yield has gone down more since, but the bonds were in free fall. And of course, part of that was accelerated by two very stupid political moves that were made in the UK. One was a cap on energy prices, like price fixing. Yep. And that would just mean that the British government would have to spend a lot of money buying energy for people because, if they just let the price go up, then people would use less. But if they keep the price artificially low, people want to buy more. And so now the government's going to have to pay for it. So that was going to send these budget deficits that were already at record highs higher. And then they decided to cut taxes, right? Rather than cutting spending, which they needed to, they cut taxes. Well, where are they going to get the money? They didn't cut spending. So that's bigger budget deficits. So this was all, snowballing. And so the Bank of England just turned tail and ran. Instead of saying, well, we're going to keep fighting inflation, and so you're going to have to deal with this mess, they turned around. And I think the Fed is going to make the same decision. I don't think Powell and the rest of the FOMC have any more backbone than the Bank of England. I don't think they're going to tell the U.S. government, deal with this crisis. We're fighting inflation. We don't care if there's another financial crisis. We don't care if big banks fail. We don't care if pension funds fail. We don't care if insurance companies fail. We don't care how many American voters lose money. We're fighting inflation. Leave us alone. We're independent. I don't think that's going to happen. I think they're going to do what they've done every time before, is they're going to try to rescue everybody with the magic of their printing press. Well, we're all going to find out that it really wasn't a trick. All they did was create inflation. They never did anything productive. They kicked the can down the road, and the illusion won't work this time. It's just they've done it too many times. The problem is now too big, and everything is going to collapse. And you got to do something other than just owning Bitcoin. I mean, you can't just have your money in cryptocurrencies. The only thing is you're young. You're young. You got your whole life ahead of you. You can start over financially. You can get wiped out. But just in case you got some older people like me that might have been following your advice and they've got their retirement money in Bitcoin. Bitcoin is still close to 20,000, right? At 19,000 something. That's still a lot of money for nothing. And it's a lot better than getting nothing if you keep holding. You mentioned all these people that are still in their Bitcoin. Yeah, they're holding and hoping. right? That's the problem. And they think they've made money on the Bitcoin, but they haven't if they haven't sold. But there probably is a lot of loans. There are a lot of people that have borrowed money against their Bitcoin. And so they're going to have the same problem that pension funds have. Once Bitcoin, I think, cracks below 10,000, I think you're going to see a big problem with forced sales and margin liquidation from the people that went into debt to borrow Bitcoin. That also includes Michael Saylor at MicroStrategy. MicroStrategy took on a lot of debt to buy Bitcoin. I mean, they're down over $1 billion on the Bitcoin they bought with borrowed money. So this is an accident waiting to happen. And all of this is going to, weigh heavily on the price of Bitcoin and other cryptocurrencies.
Then Bitcoin is drawn down in this bear market. There are a lot of reasons to be optimistic, actually, as people learn about the technology network behind Bitcoin. Yeah. But I know you'll remain bearish. I know.
Natalie, MicroStrategy is down on the Bitcoin that they bought. That's reality.
Yeah, yes, a lot of us are.
Right. So they made a bad decision as an investment. Now, the stock price went up because a bunch of people bought the stock, and that's a bubble. And I mean, it's still down like 70% from its peak, right? A lot of people who bought MicroStrategy, I like what it got to 900 or something like that. So there's a lot of people that have lost a lot of money on MicroStrategy. But yes, from the day they first bought Bitcoin, the stock is still up. Let's talk to me at the end of the year. I doubt it'll still be up. I think by the end of the year, MicroStrategy will be lower than the point that it first bought Bitcoin. Look at how much money El Salvador has already lost on their Bitcoin. I mean, they can't afford to lose money, and look how much they've already lost on it. And yes, Bitcoin has trended sideways ever since it crashed down below 20,000, but it hasn't rallied, right? There's a lot of selling around 20,000, and yes, there's still some people trying to buy it around that level as well. So you've got kind of a battle going on between the people that are trying to buy it, just below 20,000, and maybe the people who want to sell it above 20,000. But don't let that lull you into a false sense of security. Look at that chart. It looks horrible. There's a massive double top. There's a head and shoulders top. We've broken the trend line. We have got nothing but air. Once we take out that low from the big drop, which was probably around, I don't know, it was around 18,000 or 7. It went lower, then it rallied back. But the bottom is going to drop out of that market, just because it's temporarily stopped falling. That's what bear markets do. They kind of trap you in there. They try to give you a false sense of hope that the lows are in, the bottom is in, and then we get another big leg. And, maybe we'll end up spending a lot of time around the 10,000 level, maybe a little bit below, and then maybe there'll be some people that are saying, aha, you see, here's the bottom here, and then then it'll crack to 5,000 or 1,000, I don't know, and then at some point it's just going to go down. But the money is coming out. I mean, that's it. I mean, and the institutions are gone. They're not coming in. That was all just a scam to sucker in the public. I mean, yeah, there were a few institutions that went in, and look what happened to them. Look at Scaramucci's Highbridge. Look at their funds that they put all this money and they set up all these funds. These funds are down. Maybe their best one is down 60%. The worst one is down 80%. I mean, they've just lost a ton of money. They came in at the top. So any of these institutions that got suckered into this mania, they've lost a lot of money. And wait till the lawsuits start, Natalie. I mean, a lot of people are going to get sued. Look, the SEC just today, right, slapped a $1.2 million fine on Kim Kardashian. Yeah. But that's just the beginning. Look, Kim is nothing compared to what so many other people have been doing, pumping in Bitcoin. But it's not just the SEC. The lawyers are going to be out. The lawyers are going to be, look, you'll probably get sued yourself. I mean, everybody who has had any part in promoting Bitcoin, trust me, they're all going to get sued because so many people are going to lose so much money, and the lawyers are like sharks, right? They're going to look for class action, and people are going to be looking for someone to blame. This is going to be a complete shit show after this bubble implodes, right? And everybody's going to be pointing fingers. I mean, this is bigger than the dot-com bubble. It's very unfortunate. And, all of this was predictable and preventable. But unfortunately, nobody listened to me, or not just me. I wasn't the only person out there. And it's not that I'm so smart. I mean, you don't have to be a genius to understand these basic economic principles. either the rest of the world was just that dumb, or they just didn't want to admit the reality because they were making so much money
in the short term,
fantasy.
Yeah.
So look, there are a lot of reasons that stuff like this happens, but in the end, it's happening, and it's very scary. It's unfortunate, but I'm out here, and I hope a lot more people discover me, discover my podcasts, and get to understand that it was predictable. It isn't something that came out of left field like they claimed in the 2008 financial crisis, a 100-year flood. It wasn't a 100-year flood. They opened up the spigots. I could see the water coming. And all the major problems that we have, I mean, I predicted them all. And they just created income out of thin air, and now they can keep on paying their pensions. But what happens is interest rates really start to go up. Bond prices start to fall, they get margin calls, right? Now they're upside down. There's going to be a real crisis in the pension fund market, and that's why the Bank of England came in and started buying all those bonds. And in one day, the yield on a 30-year British gilt went from like 5% to 4% just in one day. And I think the yield has gone down more since, but the bonds were in free fall. And of course,